Fighting fans, the bone-crushing, blood-boiling, anything but a gentleman's sport, Ultimate Fighting Championship, or also known in abbreviation as the UFC, has recently gone public as part of Endeavour Holdings Group. So what this means is the public can now buy into this company and become shareholders of the group.
Yeah, so I guess the question that you're asking yourself is the UFC a knockout or not? And I'm going to tell you right now, it's not.
Well, yeah, we'll just start off just blowing the lid off.
Yeah, let's blow it up straight away. It's not. And now we're going to explain exactly why. So to start off with, we've run the Endeavour stock through our stock analysis tool. So the 14 fundamental steps that we take to look and see whether the company is actually fundamentally sound or not. Gets rid of all the hype that surrounds, especially the UFC. There's a lot of hype trains going on, but the stock only rated 57. So in our language, that's a flat out no.
P's get degrees, but they don't get you good jobs.
P's get degrees. And now what I'll do is I'll just run you through from our checklist what actually were the no's on the checklist. So from the 14 fundamental steps, the no's were EPS, it's not even, doesn't even have, no earnings per share yet.
Yeah.
Operating margin, trash.
Yep.
Okay, so it doesn't even have an operating margin at the moment. Gross profit, they're not actually making any money at the moment. So we're painting a pretty good picture right now. Like I would, R&D investment, not happening at the moment, but that's pretty general. It's a very new company. And Endeavour's not new, but in the stage that they are of their business, that makes sense that they're not investing into R&D.
We do.
Debt to equity ratio is above 1. They're heavily financed by debt.
Yep.
And then also, so we looked at the news articles just to give us, the hype surrounding the company, and it was very mixed view. There was not one, everything's positive towards Endeavour or not. The positive articles that did come out of it were just the UFC, which brings up another question right now. Is that their only real fundamental revenue stream?
Well, and looking at the stage that the world is in right now with COVID-19, it's very hard for them to have a UFC event with a crowd, which is basically their revenue stream. They're mostly an events company. They run events, they manage talent, they do, they're really around the entertainment industry. And they aid the agents in the entertainment industry, and they host these events. But even pre-COVID, their numbers weren't great. They've been spending and spending and spending, which just brings up a few questions to my mind. And it seems like an interesting time for them to be IPOing and listing themselves on the market with such poor fundamentals of the company. Their revenue streams aren't great. They're having small events, they're getting some money, but they're just spending. They've got it seems like they've lost the tap to the faucet. The water just keeps coming out and out. And it's just interesting as someone who's, they're hyping up the company. Like you said, the UFC is a hype train. It's massive. It's all over social media. It's all in the news. They've also partnered up with Elon Musk. He's on the board of directors. So that's just another little bit of hype that they're adding, because, he's got a cult following. Yeah. People will invest in what he's associated with just because he's associated with it. And it just triggers something in my mind that, is it coincidence that they're losing money and they're trying to list and take investor money?
Yeah, well, actually, the funny thing is, so I've got a few points about Endeavour and the way that they're structured. So if you look at prior to COVID, 43% of Endeavour's revenue came from events, experiences, and rights. So the rights to their agents and people that they're managing. 36% from talent representation. 20% from owned sports properties. So I guess in this period of COVID, that's what you want to be owning. You would rather have 43% of owned properties, because the properties aren't going anywhere. You can keep generating the revenue from there. So it's just interesting in that aspect of how it's actually broken up, that, like you said, if events are 43% of your revenue, you're so heavily invested in that section. And that's the one thing that's been affected heavily. And it's only just starting to kind of work out. They're only just starting to adapt to how to actually run an event. You look at even the UFC at the moment, they're only just starting to get fans back in certain places. But I even looked at, have you seen recently, a lot of these fighters are having to actually move their whole lives to America because they can't fly in and out. There's still border restrictions. That's still there's a lot of pressure on this business model that they've got going on, and that's why I love looking at a company's fundamentals, because it takes out all that shit.
Yeah, it just really gives a crystal clear picture of what's going on, which is just my thing. I don't like to, I guess, put names on it, or put names on the owners of the company, but from where I'm sitting, it looks like it's like a cash grab. It's like a gimme, because not only, which I'm sure you read as well, not only are they listing and selling shares of the company on the market, but the shareholders of those shares that they buy have no rights to vote in the company. Which is just like, what the fuck is going on?
Yeah, I know. What I'm going to invest in it. I'm going to invest in a company, and I've got no say what happens.
No, I want your money, but you can't say anything.
Yeah, that was nuts. That blew my mind, and that's the thing. People don't know this. Like, and you can find that. We found that article within 5 minutes.
Yeah.
Like that was probably one of the first things. I looked at it. I was like, that's insane. Like, yeah, you're going to take my money, but I have absolutely no right. And as we always harp on, when you invest in a company, that's essentially a voting right. And so why else are you putting your money in there? What do I get?
Well, and it triggered something else, because so that sale of, give me your money and you get no voting rights. Institutions will never ever buy that share, because they can't decide. They can't even vote out the chairman. They can't vote out the directors. They can't do anything.
Yeah.
So the share price is probably going to get. It's probably not going to go anywhere. It's probably like institutions aren't going to buy in, and they drive the price because they buy in hundreds of millions of dollars. So these guys just using hype of the UFC and hype of Elon Musk to try to take retail traders' money or retail investors' money.
Well, not to mention, if you even look at, we keep on that point about institutional investment, what bank or institution is going to keep handing you over money consistently when you are not even producing any profit? Or you can't even show me an operating margin.
No, and you're giving me no voting rights.
Listen, if you know a bank that does that, send them my way. All right, like I want to talk to those guys. Like as a bank, I want to, you know what I mean? Like that's absurd.
Yeah, it's crazy. It's crazy. It seems like a real strategic play from the top. Like they've thought about this, and how can we save our ass?
Yeah.
Because of COVID, even before COVID, they're just dumping money. How can we save our ass and give nothing in return? How can we get at the world and give nothing back?
And if we look at one of their main players at the moment, I guess the part of their company that everyone focuses on, which is the UFC that we've mentioned before, if you even want to look at that as just like, a sole operator within their portfolio of companies, look at the friction that's going on between the actual people that are running the UFC, the management of the UFC, and the actual fighters. Like, look at all this trouble about fighter pay.
Yeah.
And now it starts to paint that picture. Well, if the parent company isn't even generating a stack of revenue, how the hell is then the companies within that? Like, they've obviously bought a company that is having trouble paying their fighters too. Like, they're not having trouble, but the fighters are saying, hang on, where's my share? Because the breakdown of the way the UFC pays their fighters. So, the company is paying roughly 16 to 18% of its revenue to athletes, whereas you look at the NFL and the NBA, a lot of these associations pay 50-50.
Yep. Okay, and if you think about this, people like Jake Paul called out the UFC, called out Dana White for not paying his fighters properly. Yeah. But I think he's going at the wrong person. There's a guy in the company called Ari Emanuel who sits at the top, and he loves the limelight. He's been friends with Elon Musk for years. He thinks of himself as a celebrity, and he actually had a character modelled off him, or was the muse for him. And I'm sure everyone knows the series Entourage.
Yeah.
Ari Gold is Ari Emanuel. So he's the super agent of Hollywood. He knows, but maybe that's why Jake Paul didn't actually go at him. Yeah. Because he's got connections.
Yeah, that LA.
And because Dana White isn't even the owner of the company anymore. Dana White can't really change. I mean, he has a lot of sway in fighter pay. Yeah. But like you said, the big company that owns the UFC is losing cash. The UFC is probably propping up the other businesses within that entity. Yeah. But he probably wouldn't be smart for him to go at the actual big dog.
Well, it's funny that you mentioned that point about cash. I read that at the cash burn rate, so the amount that the Endeavour is spending, the amount of cash that they're burning through, at the rate they're at the moment, it has only enough cash to survive for the next 8 months.
Yeah, I personally, my thoughts on that was they're going to have to start selling assets to be able to fund it. And whether or not they sell the UFC, again, may occur.
Yeah, and when you talk about assets, this is when I was talking about that structure that they had. If you had that, you flipped around that 43% wasn't events, it was actually property, owning property, you wouldn't necessarily be as worried because, okay, I've got a physical asset that if I have to sell something or, I own the property, that's like you're good. If you're owning 43% of your revenue is I own sports stadiums,
yeah.
Okay, let's just start filling them out. Let's start renting them out. Or if I have to sell that back to the bank, I'm going to get bank.
Yeah.
You know what I mean? But you don't have that physical asset. So what are we going to start selling? We have to sell the companies that we own.
Yeah.
And what's the biggest one that's going to help you reduce that cash burn rate? Or if you're going to keep spending at the cash burn rate, what are you going to do? Oh, we'll have to sell the UFC.
Well, it could be the UFC. They've got a few others here. Like I saw that they have Miami Open.
Mm-hmm.
They own...
the pro bull riding company as well. Like
professional bull riders.
Yeah, like we're from Australia, so I don't know how big that is in the States.
Like,
I'm not really sure that,
The Freeze Art Fair. New York Fashion Week's a big one that they have. I mean, I understand they own some in the NFL.
But once again, all of these are dependent upon events being able to be undertaken at capacity.
Yep.
Now, with this way that the situation is with the pandemic, like things can't be at capacity. It's just not happening at the moment. So they're in this real weird phase of their business. It was a shit time to IPO when you really think about it. Fundamentals weren't great. And then you've had this external black swan event where you're like, what the fuck? Which is like COVID. But people are still hyping this stock up. I don't really get it.
You know, I'd love to be a fly on the wall and to hear Ari Gold losing it right now.
Yeah.
The stress that must be going through that poor man's head right now, It would be crazy. And it is a situation where they're hyping up a stock, but the fundamentals are going the other direction. I feel like they're marketing it. They're marketing it as being the UFC going public when there's a whole lot more underneath it. So that to me just tells me it's a strategic marketing play. And then on top of that, by aligning with Elon Musk, and I saw that they were looking to. Have you seen how the NBA is using NFTs to sell rights to videos and things like that? They were thinking of doing that for the UFC. But again, the NFT space is such a speculative space right now that it just seems to me that they're marketing these massive hype trains to sell a stock that's not worth it.
Yeah.
To get themselves out of their cash issues.
Yeah, it's crazy. But I guess if you look at the positives, so what is actually creating this hype is for the UFC, the viewership is going through the roof. At the moment, one thing that they were able to do was actually put events on when other sports weren't able to do it. So they did well. They adapted, they pivoted, they worked out a way to get events going. And you actually, there's a few comparisons between boxing and the UFC that there was a few shows. So there was a fight on Top Rank, which is one of the big names in boxing, and Danzen also had an event on at the same time. So they had they peaked at 427,000 viewers. Whereas if you looked at the UFC, they had the same event on. They peaked at 1.2 million viewers.
Oh, don't get me wrong. They've got the rights that they've got for events are top tier. Like they've got the UFC, they've got Miami Open, they've got New York Fashion Week. These events are top tier, which means if they can get their handle on the cash flow issues and they can get things, this probably is going to happen post-COVID, but if they can get things going in the right direction, then it could potentially be a really good stock to own. But at this current stage, I wouldn't touch it with a stick. Yeah.
So what are we wanting to see out of Endeavour? The number one is management.
Yeah.
I want to see the management step up and start to, like you said, let's start ticking off these fundamentals. Let's start getting rid of some of this debt. Let's start paying off some of this debt. Let's work out. I think the biggest thing is this voting rights. That's not going to sit down well as an investor.
No,
if you don't have any rights, what's the point? We need to start generating more revenue and our operating margin, how can we, what do they even, what would be the margins that they make? Like how would, if you try and break it down now, what do you have the ability to make a margin on? I guess the cost of the event, you just have to reduce the cost of the event.
Yeah, they probably have to increase the push of pay-per-views.
But
one thing that really triggered here was the trust is an all-time low, because this is all kind of a blank over what's really happening. And there was some filings that they made at the SEC. I'll just quote what they have said to you. So this is what the SEC triggered as a potential red flag. They did not have a sufficient documented risk assessment process to identify and analyze risk of misstatement due to error and or fraud, and not having sufficient documented compliance, communication and investigation policies.
Yeah, so they got donkeys running the company.
big talkers.
Big talkers, yeah.
Big talkers. And then not only that, they followed up with saying the SEC does not require Endeavour to have an independent auditor provide an opinion on internal controls until its second annual filing following its IPO. So that in about a year or two, they could get hammered by the SEC. And Endeavour also notes that they did have they have fully remediated the material weaknesses within their systems. However, the firm still discloses that in the future it is possible that additional material weaknesses or significant deficiencies may be identified that we may be unable to remedy before the requisite deadline for those reports.
Yeah.
So they're saying that there is a potential that they're going to get fucked by the SEC.
Yeah.
In 2 years.
I could see that happening, and then that's so this is why it's just super important to just look at a company from a non-emotional point of view, because sometimes you take that veil off and it's not pretty, and then so that's why if you have a fundamental analysis, just make sure that you're looking at exactly what is in front of your eyes. It's not the perceiving eye, it's the seeing eye. You know what I mean? Like, because we see something and we perceive, UFC doing, like I said, those positives that we talked about, they're getting more viewers, etc., etc. But that's not the real picture. The real picture is this company fundamentally operating efficiently, and is it being managed well? And the answer to that is no.
And I had people reach out. I had friends reach out to me, and she messaged me and she said, "Oh, hey, like I see the UFC is going public. Would you buy this company? Would you buy it? Like I'm thinking about buying it." And my only response was, and I thank God that my response to stocks is always just wait and look at the fundamentals, because you want to see what they're actually reporting and see whether or not it's a hype train or not.
Yep.
Because year to date, she would have lost money.
And but like if you just look at the trend now that's happening with the price.
Do you have the price up?
I've got the price up now, so it's sitting at $29 a share. In the past 5 days, it's been up 7.44%. It's been up nearly 1 month. It's been up about 7%. 6 months, 3 to 6 months, roughly about 15%. So like it's showing price action.
Yeah.
But this price action isn't matching up with the fundamentals. So you need to, when this is occurring with a stock, when the price doesn't match up with the fundamentals, you need to be disciplined, and you need to say to yourself, I won't invest in this at this time. Until its fundamentals match the price, then it's a go. Then you can be 100% sure. On this, I can't be 100% sure, so what I would call this would be a gamble. And when you invest, you don't want to gamble. So, up to you what you want to do, but for me, it's a pretty clear picture, but that's just due to discipline.
Yeah, and what I have seen happening in the company is that private investment have been trying to organise stakes. So, like Fidelity Group is one of them. These guys would be able to organise potentially rights to their investment, but everyday people buying from the market have no rights.
Yeah.
So the majority of the public has no rights. So the big funds have no rights. So I think it's going to be a tough battle for this to be a public company unless they loosen the constraints on the rights.
Well, you can look at if we go back to like that star power when we compared UFC to boxing. the best UFC fighters are going to boxing to get paid. So you look at UFC and you say, yeah, there's getting more viewers, it's better than boxing, but why are all the best stars going to box?
Yeah, look at Woodley most recently.
Yeah.
Woodley, he would have earned bank compared to what he did in the UFC.
Yeah, and that's just a name like Conor McGregor, who can demand the pay. Even he went to boxing and look what he got paid. He's never been the same since.
Yeah.
You know, you've got these stars that I wouldn't be surprised if they start crossing it, because you look at the sport, like it's not a longevity sport. You keep getting hit in the head, like you're not going to be able to function. Yeah, you're not going to be able to function properly. But if you get hit in the head for 12 rounds, but you make 100 million, it's probably worth it.
And especially like the sensationalization. Is that a word?
I don't know.
But it sounds.
You've been doing too many UFC rounds.
By the social media stars and creating their own boxing events. Like boxing has got a hype train behind it.
Yeah, but you look at the way, maybe we should do this next video. We should compare the way that Top Rank or even some of the other boxing organizations, whatever ones are actually floating on the market, we should work out how they are run, how their management's run, what their revenue is compared to the way the Endeavour is running things.
Yeah.
Then we can do apples for apples.
Yeah.